What up, Pod Squatters? I'm Anita Wong.
And I'm Tiffany Lee.
We're investors, real estate agents, and the co-hosts of SARE Ladies, the girl power arm of subtle Asian real estate.
Every episode will feature funny, casual conversations with dope AF participants killing it in the real estate game. But also mostly people like you and me, just trying to figure it out. Stay for the drama and lulls. We're not pulling any punches.
But first, a quick SARE Ladies announcement.
Want to learn how to invest in real estate but don't know where to start? Then be sure to check out SARE's 30-Day to Buy a Home Challenge webinar series, where we teach you how to get from 0 to 1 on your first or next property. Our 6-part series begins airing on December 6th on Facebook Live and YouTube. Let's ring in the new year with your new house. Happy buying!
Now on to the show.
Hey, Pod Squatters. Welcome to the SARE Ladies podcast. This is your host, Anita Wong and Tiffany Lee. And today on the pod, we have a special 2-part episode on year-end tax strategies because, this is the time to make the biggest impact on your taxes. So today we have our friend, Tony Hoong, the CPA dude, on the pod. Say hi, Tony.
Howdy. Thanks for having me.
So Tony was actually with us on an earlier episode, and might I say we are quite a ways now who we are than who we were back then. But Tony, to his own shock, was actually one of our most popular episodes during that time. So we had to have him back. And if you haven't checked out that episode, though, it is linked in our show notes. So please do go check that out.
All right, awesome. So today we're going to be doing something a little bit different with Tony, where Tony will mostly take over most of our podcasts with supervision, mostly from Anita, of course, because she loves to make sure we run a tight ship. We were just joking about that earlier. This episode is going to be broken up into a 2-part series. The first of which is a general year-end tax strategy you need to know, and the second will be advanced tax strategies. Each episode at the end will be anchored with questions that we've gathered from our community on Facebook and Instagram. So for the future, any questions you have for our guests, feel free to drop them in there and maybe you'll make it into a future episode.
With that said, if you don't know Tony, a bit about background about him. So Tony grew up in his parents' mom and pop restaurant. From a young age, he developed a peculiar interest in counting and organizing the cash earned at the restaurant each day. Before he started the CPA dude, Tony accumulated years of experience working for the Big Four accounting firms and advising top-tier companies. He earned his accounting and management information system degree at the University of Minnesota Business School, and shortly after, put his accounting skills to test and obtained his license as a CPA. When Tony isn't elbow deep in tax returns, you can find him in the Bay Area lifting weights, bullet journaling, and keeping up with the latest tech gadgets. Hey, Tony.
Wow, so fun. Yeah, there we go. Wow, that's all right, cool. Got something behind my name, I guess. Yeah, besides just being a dude. Yeah.
The dude part is the lifting weights, but the soft side is the bullet journaling.
Yeah, I stay grounded with myself. Yeah,
the masculine and the feminine. Anyway,
yeah. Mm-hmm.
Let's jump into the first bullet: year-end tax strategies. Cleaning up your bookkeeping. That is kind of a cool segue from bullet journaling, right? So what are your thoughts on that? Let's take it away, Tony.
Oh, yeah. So, just like journaling every day, just, you don't need to do your bookkeeping every day, but it does help, especially for a lot of real estate folks. Usually it's a scurry year end, not even year end, actually. It's always like March, April, where you're like, oh, let me find all the receipts for my rental property. And they're like, did you get this, and that? And I'm like, dude, I don't know. They're supposed to provide a summary list of everything. So I think right now is a really good time for everyone to not scramble come next tax season, make your life a little bit easier and get your books in order. So simply going in, doing all that now, because you probably neglected it for 12 months. Most people I don't know, they just don't do it. They're like, oh, rent checks in, and then some expenses are here and there, but no one actually keeps track of it. So I think, just getting all your books done, updated now, just so your life's going to be super easy. Everyone always knows revenue, but all the expenses, not knowing what to write off or actually doing it. All the first time investors too, just kind of getting that put in order. So, hey, knowing what you can write off, like your management fees, your repairs, what else you got? Interest, insurance. What else is there? Interest, insurance. What else? Oh, like placement fees. So if you don't know, just start asking all your friends like what they write off. There's usually a general good source, especially a SARE crowd. SARE crowd's like wicked good with taxes. I'm like, it's different speaking to other folks. So if you don't know, just ask someone that's
I will. I will
right
say, and I will out Nelson for this, but he Nelson uses his VA to do all his bookkeeping. So he he tosses all his expenses to his virtual assistant who lives in the Philippines to do all his bookkeeping. And I have started doing that this year. It's life-changing, guys. It is freaking life-changing. My CPA is like, "Are you already done?" I'm like shocked this year. So as an
exactly.
added bonus, if you're extra complicated, go find a VA and just do it for you.
Yeah.
Hey, quick plug, Anita, who told you to get a VA?
And then Tiffany told me to get a VA. It's true. Best business
nice.
investment I think I've made last year for sure.
Delegation. So, Tony, is that something you help advise with on for your clients, like cleaning up the bookkeeping?
Oh yeah. Like we do bookkeeping. We help them, teach them whatever they want to do. It's just like a very basic but just tedious task that no one wants to do. So like what Anita said, you're probably best just finding a good VA that can do it. Make sure you find one that can do it right though. So like categorizing is one good thing, but like actually balancing against your bank statements and your credit cards is like true bookkeeping. So that OG phrase of like, do your books balance or, balance your checkbook, it's like actually true. So make sure you find like a good person on that side.
Hey, just an idea, right? Do you have a CPA dude bookkeeping template that you would prefer your clients fill out?
Oh, we actually do. Yeah. Just because like they always ask me, I'm just like, yo, here you go. I actually just sent it to, you guys know Arthur? You?
Mm-hmm.
Yeah, he's pretty prevalent on the group.
Oh yeah. I sent over his my template to him yesterday. Him and I were just shooting a breeze yesterday, catching up. But yeah.
Well, will you attach it in the show notes for us, and so our listeners can check it out?
Yeah. Like,
and make sure to include your contact information up top. So once they're done doing their bookkeeping, they know where to send it to.
There you go.
See, it's a marketing tactic. I'm a marketing genius, you guys.
I love it. I need you on the team then. Yeah, I just my marketing is literally none. Just hey, here I'm here to help. What do you need? Is generally our marketing skills. Nice. So yeah, bookkeeping
we're big
is very
on systems.
important.
Yeah. Yeah, bookkeeping is really systemizing, right? Everything that you do. So yeah, me and Anita, we get into arguments about systemizing all the time. Very recently, Anita's like, look at me like, why are you airing our dirty laundry? But right, it goes into tax prep. There's systems and everything, right? So bookkeeping, you have a system for that. You're not going to freak out over it next year, right? So this is good. It's a good underlying strategy to have. Do we feel good about the bookkeeping part? Are we ready to move on to the next strategy? There's 6 steps. This is a 6-step program, guys. So we're going to move into closing statements. So Tony, take us through closing statements.
Yeah. So closing statements, once again, I think, after, you or Anita sell a home, you send them all these docs, that piece of like paper no one cares for. But the closing statement I actually care for as like a CPA, or if you do your taxes on TurboTax, you need to extract out your prepaid interest and your prepaid property taxes. That's just if it's like your primary home, but also if it's like your investment unit, all the closing costs that you paid actually add into your basis. So don't throw that away. That one's like the one piece of paper, at least I care for, I don't know what else you advise your clients to keep from that stack of papers, but that's the biggest one for your tax person, or when you go file this on TurboTax.
Awesome. Okay, so closing statements. Next piece. 3, estimated taxes. Get your projection in now. What does that mean, Tony?
Yeah. So this is like it's applicable to everyone. So it's not just if you're, have investment unit, if you have a day job, you're looking to get into real estate. Like this applies to everyone. But simply put, it is pretty much doing your tax like a pro forma, like how much like actual total income you have. So from your W-2 to your rentals to your flips to your crypto to your stocks to whatever else folks do, side hustles on. So calculating all your taxable income sources and then actually running a projection to see how much tax you owe. So the reason why I tell folks to do this right now is that to avoid underpayment penalties. So like, using you two as an example, right? As, agents, you're 1099, just got paying taxes every quarter. If you didn't, you still got one more quarter on January 15th. So shove it in there or else you get the underpayment penalty. And that's, you can round, there's not the calculation's super complex, but like you can generally round up to 10% of the underpaid balance. So if you owe 20 grand and you threw in 0 in the whole year, you're looking at $2,000 penalty. So these are kind of like silly fees I tell folks that they're paying. So it's kind of like, when you overdraw on your bank, like everyone knows not to overdraw on the bank, but does it happen sometimes? Yes, but same thing for underpayment penalties. So that way you get this payment in by January 15th. And then come tax time, because for folks that are investors, especially if you're in a partnership and you're going to get a K1, those like 9 times out of 10, it's going to be extended. Like just because partnerships always extend, just because like those bigger tax firms that handle those, they'll just extend because they got no time. Just try and get it in, and then they'll finish it generally, unfortunately, in September. So, and the reason why is that you need to pay in all your taxes by 4/15. So you only get time to extend your taxes for the information. You don't get an extension to pay your taxes. I think that's like a misconception.
Oh,
So,
wow. I
yeah.
didn't know that. Oh man, I'm in trouble. I'm gonna go to jail, Tony.
I
I thought all my extensions was today. It was just for information. Oh
Yeah.
man, we're recording on the podcast. I should not have said that.
It's all good. You got money, so just pay away your penalties and pay your jail bond. Yeah.
All right. So preparing for the extension, estimated taxes. So these are all things that you cover, right? Is that also part of the template that you have with the bookkeeping? Is this also like a separate tab? Because if it's not, it should be.
Oh, so I've tried to make this one. The calculation is so complex. I'm just like, I haven't been able to make a good template. So I made a few versions of it. So there's actually a couple ways to estimate your taxes. There's the safe harbor method. So you can pay in either 100 or 110% of last year's tax liability, depending on how rich you are. And at least you'll avoid the underpayment penalty, but you won't have enough paid in possibly by April 15th. So there's that safe harbor method. And then there's the second method. It's like the actual. So that's kind of like what we recommend. It's like, hey, how much income did you actually make this year? Just in case you made way more or way less than last year. And then rerunning the calc. I haven't had time, but I thought about like, you could hack this in like a TurboTax where you fire up TurboTax and then you can try to run the numbers as if it was your 2022 tax return and see what pops out. I don't know if it does that though. It's just one of those like back burner projects I want to try, but time's not my best friend. So I never got there.
We should get a software engineer within the SARE network, because there's so many software engineers in there, and then just create our own like real estate tax prep software. And it's like CPA dude licensed. Oh man, look at all these business ideas Tiffany's coming up with.
Yeah, who's a software engineer? Hit us up. Yeah, slide into the SARE DM. Yeah.
Yo, for real. Okay, this is actually really cool because like I'm usually so delinquent with my taxes, and Tony, you're making it so interesting because you're speaking my language, man. Usually every CPA I know is some boring old guy, but like, Tony's like a peer. So this is super fun. All right. So we covered 3 and 4 there. So estimate taxes, getting in your projection, preparing for the extension, which is just for education, not for payment, guys. Remember that and stay out of jail. So number 5, and this is very important for the real estate folks, 1031 documents and an installment sale. And I think working backwards on this, I'd like to hear from you, Tony. What is your suggested time frame for doing all these things? Like if we were to start with a clean slate in 20, like say you just dropped the ball in 2022, you're like 2023, my New Year's resolution is to get more on top of doing this in a timely fashion. Once we're done, tell us what time you would recommend doing 1 through 6. But right now we're at 1031. So let's
Cool.
talk about that.
All right. Yeah, that sounds good. Yeah, good call out on the timeline. But yeah, so 1031 documents, also doing your installment sales, if anyone has those going on, but just the documentation for your CPA or TurboTax, whatever it is, just having it in place. So the 1031 documentation, generally it's pretty easy just because just the title company, 1031 company is going to give you like those docs, but extracting out the part of what was your original cost basis on the home, that's the hardest part. So seeing how much did you buy this old property for? And then the one that gets everyone, their mom, is like, how much did you make in improvements? So no one ever tracked their basis on their properties. They just were like, cool, bought it, cool, cash comes in. I don't blame them. That's the whole purpose, right? They're investments. But knowing how much we need to calculate from the gain or how much we need to defer is the hardest part. So 1031, obviously, you know how much you sold it for, how much new properties were, but the hardest part is what was the original price of the property. So that one, cleaning that up, finding all those old receipts. Probably a common question that we do get on that. It's like, actually at the SARE Friendsgiving was one dude, he homie worked on his house for like 20 years. And he's just like, I'm about to sell the home. I think his cost basis was like 150 and he sold for like high ones. And I was like, oh God. I just told him I'm like, whatever you got for documentation, that's the perfect world. Add up all those receipts. But if you have a ballpark guesstimate and you're a big gambler, I mean, be my guest and put down what you think your cost basis is. I'm just not signing your return. You can sign your own return. Yeah. Yeah.
Like, wait, so question, and this might be a dumb question, but when you prepare everyone's taxes, right, for your clients, do you run it through TurboTax after you're done, or you file directly to the Fed?
Oh,
The
so
IRS, sorry.
Yeah, so we have our enterprise software that we use, which is actually a derivative product of Intuit. So they would just use their corporate version of it. But yeah, I was like, man, TurboTax is, I don't know how to use it. So like one embarrassing story was like someone from the group reached out and they're like, yo, I got the whole return done, but the taxes seem too high. I like did it all in TurboTax. And I was like, sure, I'll just take a look. You know, I'm probably just can guide you like what it looks like. Fire up the Zoom. Just showed up like an idiot because I'm like, oh, I have no idea how to use it because I never got trained how to use TurboTax. I only got trained how to use my own tool because I know what it needs to look like on the output, but like I don't know how to like push the buttons in TurboTax to make it look. So I was like, sat there for like 45 minutes and finally figured it out. But I'm like, that was a dumb idea. I thought it was gonna be like 5 minutes. I know exactly where to put in the button, but it was a partial sale exclusion. So they moved for work. It was their primary home, and they couldn't take the full 121 exclusion. So we just did a partial part, but just didn't know how to trigger it in TurboTax.
So as an accountant, would you say TurboTax is like a legal Zoom for attorneys? Like, do you look at it and you're just like, what is this? Like, it's not nuanced to like, from a specialist point of view, like, what needs to happen, and TurboTax is kind of like too umbrella-y. What's your take on that?
So the free versions, they're not bad if your situation's basic. But then once you start paying for the upgraded versions, it's like almost like, bro, you should have just hired someone. We had someone come in and I think they're like a sole proprietor. They paid like $450 still, and like TurboTax fees. I'm like, it's quite a bit for software to DIY yourself. But yeah, kind of
What
like, I
is
mean,
like
overall,
what is your like rule of thumb? Be like, if you start doing this, you should start getting out of TurboTax. Like,
oh yeah, you generally graduate out of TurboTax. So I say once you have K1s with multi-state, that's generally when people start coming to us. When you have multiple rentals, like 3+, that's another time to start getting out of it. If you're self-employed or have a side hustle, oh, for sure, get out of it. Just because their questions, because they have the series of questions that help you do your tax return, but they don't know what you can or cannot write off. So they're just missing a lot. So you're gonna be losing money paying for that software. And then stock-based comp folks. So like those folks that have stock options, I'd say, and then RSUs. Those are like, that's when you kind of graduate, kind of like that, more money, more problems.
so
Like
essentially,
you gotta get out of it.
anyone in SARE should just stop using like TurboTax because that's a pretty. I was like, I've been using. I used to use TurboTax pretty long way into that. I think I had multiple rentals for a very long period of time in TurboTax, and I'm not sure how I whittled that into place without
Oh, yeah.
without getting audited.
Oh yeah. You're still here.
That's so funny
still
because it
here.
goes back into that Asian DIY thing, right? Like you always feel like you can do everything yourself, and then it's like you have this ego about hiring a specialist. But this is actually a good conversation to have, right? As ABCs, it's like we have this immigrant mentality that we have to do everything ourselves. Just to bring this back into the AAPI fold, right, Anita? Like, so it's not just straight
My
up
dad taught me to
education.
do that. I will
Yeah,
say
yeah.
my dad forced me to use TurboTax.
It's like you can do it yourself, and you're like, this is getting way too nuanced. And it's
I
like,
was like,
okay, now we have to hire a trusted specialist, and that's where we position our friend Tony. Yeah, exactly. This was all he did was count money. He's like DIY sensei of taxes. That's awesome. All right, so moving forward. Speaking of dads and and retiring, I guess that's number 6. Self-retirement accounts, HSA and IRA. All our dads, if we're like in our 30s, if we're millennial Asians right now, our dads are thinking about retirement, and they've nailed. I feel like my dad's been nailing retirement into my brain and putting money aside for that since I've started working, right? So take us through self-retirement accounts and HSAs and IRAs, Tony.
Oh yeah, for sure. So just kind of like a band-aid solution is just to start contributing toward these accounts. You used to actually have till 4/15 of next year to contribute towards these accounts, but you just don't want to miss the ball on it. The reason said is that you only get X amount of dollars per year. So is it 6,500? I think the inflation got adjusted. $6,000 or 6,500 for your IRAs. So you only get that per year. So say if next year you're like, oh, I made money and I got like 12,000 contribute, you can't throw 12,000 in. It's 6,000, 6,500 a year. Should probably go learn the inflation adjusted rates, but whatever. But yeah, just getting that part in. And then also your HSA is big. So for folks who don't know what that is, it's your health savings account. So when you have a high deductible insurance plan, you're able to have this HSA account, and it's probably the like unicorn of tax accounts actually, because you get a deduction for putting it in, and then it grows tax free. You can invest it. A lot of people miss that part. So like you put the money in, you actually need to like go put it into like some mutual fund or ETF. Actually, and I take that back. I'm not a financial advisor. You put in whatever you want. So I take that back. You put in whatever your heart desires. Yeah.
Yeah, just give my
Sometimes
ideas.
until I'm licensed in that field, I'll provide.
Are you
And
working on that, Tony? Is that something that you're doing, or you're just joking?
I started, but it's hard. So I'm like, or it's not hard, it's just a lot of time, which is my worst friend. So I'm like, ugh.
We're
But
always big on self-improvement. I feel like you getting into finance, that's like weightlifting, right? It's just adding more weight. Let's bring this full circle.
just there we go.
Get
Yeah.
stronger.
Just
Yeah.
need to bite the bullet and do it. Yeah. So yeah, so that's the HSA, and then was it your IRA? And then there's for the folks that are self-employed, kind of for yourselves here, just the self retirement account. So your SEP IRA, your solo 401k, self-directed IRAs. just contributing towards those, because that's a good band-aid solution for a lot of folks. So your SEP IRA, 61 or it was 61 last year. I don't know what it is this year for inflation adjusted, but yeah, you can slap in $61,000 into this bad boy and shield it and defer it from tax. So tax strategies, generally, the overarching principles are always deferral, acceleration, charity. Like those are your big things. And how do you like game it? So yeah, if you deferred all your money into a SEP IRA, that's just a way to shield it. However, you'd have to pay yourself a very high W-2, which kind of not defeats the complete purpose, but a lot of Social Security and Medicare taxes. So yeah, just getting those items in there last minute will just be good for everyone. Just since we're in December now, there's not a ton that you can do, which actually was good for when your time frame should be for the whole year. So this is to wrap it up full circle. Like if it was a perfect year, say your New Year's resolution, you're drunk, you're like, I gotta get my taxes in order. Like this is like the order of operations that you should do it in. So January, you should actually sit down with either yourself, tax advisor, like I don't care who the hell it is, just sit down and get a tax plan in place. So a tax plan is equivalent to like a blueprint of your house or like your workout plan. Otherwise, you're like building a house just aimlessly with your head chopped off. So get a plan of like, what are your income sources projected for the year and how can you mitigate each one of those sources? So say if you have this house and you're like, oh, I'm going to 1031 it. Cool, write it down. That's part of the plan. It's as simple as that. You just have to write it down, because then you're going to be like, all right, am I going to have boot or not? If you have boot, all right, now you have to think of ways to reduce your boot. So it just write down everything you got. So that's like January. February, get all your docs ready to file your taxes. Just get it done out of the way. Like don't like, if you have the ability to not extend, just do it. Like all your docs are going to come end of January anyways. So probably by the time it snail mails to you, first week of February. So you should be done by February. So get your taxes filed in February. This is it for personal taxes, right? And then if you have, your business tax returns, so your S Corps, your LLCs, that's due March. So, plan on that or get your extension ready. And then April, if you were lazy from February, you didn't do it, and then file your taxes in April, or at least pay in all your amounts for your extension, file your extension, but pay all your taxes then. And then also in April is actually Q1 of estimated taxes. So pay in 2023's first quarter estimated taxes again, and then revisit your tax plan at that time also. So, hey, a whole quarter's passed. What can you do? Like anything adjusted? Like, did you move states? Did you buy a new home? Did you have a kid? Like life-changing events, buy a car, like those things like actually affect your taxes. So revisit with your tax pro again, or sit down on your tax plan and update it. So that's the first 4 months. And then month 5, I think you can finally breathe. For month 5, you can finally breathe. Oh, actually, I joke. You probably neglected your bookkeeping this whole time. So go update your books or VA. Yeah. Yeah.
He's a realist. I love that. Like,
yeah.
Okay. I like how you bake in the time to go back and be like, whoops, I didn't do any of that.
Bacon for human error, which is bound to happen. Human error and procrastination.
Yeah, procrastination's big. So yeah, so go clean up your books. So that's month 5. And then June is actually one of our bigger, busier months, because that's actually when we do a lot of our client check-in meetings, just to be like, hey, what's happened since we last spoke? It's halfway through the year. Do we need to course correct? So probably it's just more kind of like I call it like a tax tune-up. It's like a tune-up for your car. Just tune up your taxes for the year so you don't veer off too stray. And then I think from there, now I think we're breathing. Like July. No, I joke. June, you should have paid estimated taxes again. Yeah. So the estimated tax. Yeah, estimated taxes. Yeah, because like people think like my year's chill after 415. I'm like, dude, it's worse right now than it was back in tax season. Like, it just doesn't stop. So I forgot. Estimated tax due dates are 115, 415, 615, 915. They're not real quarters. Don't ask me why. It's just the IRS. So 1469. Those are your months that you need to be aware for your estimated taxes. So that being said, July and August. I think we finally have some calm time to breathe. Yeah. Yeah. So that's good. And then, yeah, whole cycle starts again. Because then you need to do towards Q4 again, you really want to execute on that tax plan that you made in January. So say if you made the tax plan, you're going to do these 3 strategies, you did nothing for 6 or 9 months, then please do something, or just pay your taxes to the tax person. I mean, I don't care, but I think most people hate paying the tax man. So that's kind of like a recap from a full year, full cycle. Taxes aren't a once a year type of thing, unless you're W-2, probably, actually, to be honest. But the SARE community, that's not a, no, it's a whole year process that you should be continually working on just to monitor everything that's going on, especially since a lot of deals are coming in. And then checking in with how your investments do too. So a lot of folks that we're working with are in the short-term rental space. So highly profitable, even after depreciation, they're in positive income positions. So thinking about ways to reduce those taxes also. And then also planning is big throughout the year too. So planning, what I want to say, like, if you're getting into units or setting up a business, setting up short-term rental loophole, like those just take dedicated steps. So from tracking hours, that's, get like reps tracker or something like that, Clockify, something just to track all your hours throughout the whole year. So it's all maintenance as it comes down to it. It's why taxes suck for most people. Good for me, I guess. Yeah.
So I feel like it needs to come out of this is like a Tony tax workout plan. Like, like
I love
every
that. Oh my God. You're like a
month.
personal trainer for taxes.
Oh my gosh. And it has to be like formatted to be like, this is your goals and your gains, your gains by
Nice,
this
nice.
month. And then
And your tax cuts, it's cutting and gains, like dirty
Tax
gains
cut.
and cutting. Oh man, wait. Oh my God. All right. This is another talk
this is
later.
another
Pin it, yeah.
project.
Pin it. That's
But
awesome.
we'll have to
Yeah.
every single month, these are your goals, and we'll have to do like a workout plan. These are your things that you need to accomplish. And we'll
Yeah,
call
it's
it
a
the
really good
Tony.
analogy. Yeah, just have to
Yeah.
maintain and keep on doing it. That, and then I always joke too, like sometimes a babysitter, sometimes a therapist. I'm like, man, it's cool, just keeps going. I'm like, all right, yep, a lot of taxes, understood. Well,
Yeah,
I'm
you're
good there.
getting me pumped, no pun intended, to do taxes. Like
There you
pumped, like
go.
weight
Yeah.
train. I want to lift. I want to clean up my books. Just talking it like this is cool. Yeah, let's get healthy.
I mean, if
Love it.
someone's gonna make a graphic for you like a digestible graphic for you, it's gonna be Tiffany. And
It's
yeah.
a muscle, and it's like,
I'm
yeah.
looking forward to this. We got this on recording now, so I'm just like, hey, remember that one time I was supposed to get this infographic?
Yeah. All right. Well, we're gonna end the episode with a few questions from our community, and we have sources from our Facebook group, and so these are real question, real time. So this first question is about cost seg, and it's a big year for cost seg. So if we do a cost seg on a rental property this year, does the depreciation offset other incomes in the same year? Or does it only offset rental incomes from the same property in the current and future years?
Yeah, so very good question there. So on a cost segregation, Anita hit it spot on. It's very important this year because for folks that are trying to do bonus depreciation, you get the full 100% this year, and it phases down 20% every year after. So next year's 80, year following that 60, 40, 20, 0. And it does offset only passive income. So you have rental property 1, ran a cost seg on it, you're accelerating your depreciation, which is good, accumulate a loss, and then you have property 2. Then if that, say it's really profitable, those 2 would actually net. So you can bring the losses over from property 1 over the property 2, and then that way you reduce your overall portfolio. So, and the reason why is because rental properties are defaulted as passive income. So passive losses can only offset passive income. So that way, and then also any K1 investments. So anything that's passive in nature, per the IRS, not like if you think like your dividend portfolio is passive, which it technically is, but from an IRS side, it isn't. So anything from a K1 perspective and also rental property perspective, the cost seg would offset that. However, if you ran a cost seg and you have a W-2 that's over 150 grand AGI, then it would do no good for you. So because you can't offset passive active income with passive losses. So that's kind of like the caveats of the cost seg, unless you're doing the short-term rental loophole. So taxes is like there's general rule, the exception to the exception to the exception. So to close it out is that if you're doing a short-term rental loophole, which we'll just cover over, I think, in the next episode here for the more advanced part, is that yes, it would offset your W-2 income, but we'll leave it there. So you have to listen to our next episode. Yeah.
Love the cliffhanger.
Yeah.
I like how a tax episode we can still bake in cliffhangers like, hey, if you want to learn about STR loopholes, stay tuned for the next episode. All right, so we're good on that question, right? That first question. We have another question here from Instagram. User at Spicy Chicken wants to know, do you do cost segregation before or after rehab?
Spicy chicken, I love it. Okay, so cost segs we generally recommend for post your rehab, because when we make the intros to the cost seg partners, they always ask us like, what's the property, what's the purchase price, is there a prior depreciation schedule, and then total improvements made on the property. So would probably want your number after you've made or spent all your money to rehab your property.
So I wonder if you are doing, let's say your rehab's going to take some time, maybe not 20 years, but maybe like some time. And, as you know, I mean, it's 20% drop every single year. You think it's more, I guess you should need to really plan it out to be like, if you want to take it now, take whatever rehab you have now, or you do it later, or, maybe risk, rush for your rehab.
Oh yeah, I think too. Definitely. You hit it spot on the planning part, because it's like, one, do you need the passive losses to start with, or accelerating your depreciation, right? Do you need to change your 27.5 year property to 5, 7, 15 year and separate it out?
Yeah. Well, talk to your CPAs, everyone. So, your last one for this episode. Kathy Ho asks, so rank what's your best bookkeeping software platforms for new LLC entrepreneurs to professionals?
Oh, nice. All right, cool beans. Nice. So the best bookkeeping software, I'd say, depends on like where you're sitting at. So if you just want to keep it lean and cool, easy, no charges. Wave Apps is super easy. So they're free bookkeeping software. That's kind of for more on like the entrepreneur active business side. And then if you want to like shell out for some extra bells and whistles, QuickBooks Online. But they both do the same. They're both just system records. And then for the folks in the real estate side of items, Stess is free, so you can use them. And then QuickBooks too. I've seen people set it up that way too, where they have QuickBooks for all their properties. So whatever's easiest for you to use, with whatever's like within your budget. There's a ton more, but those are the 3 simple ones to recommend.
Cool. Awesome. Well, thank you very much, Tony. And that concludes our first episode of 2 on year-end tax strategies. And we're going to attach all of the things, all of the 6 things you do need to know in our show notes today. So please catch that if you had to go back. So we'll catch you next time, Tony. See you around.
Take care. Thanks for having me.
Hey, Pod Squatters. We hope you enjoyed today's episode of SARE Ladies, thanks to the support from our following sponsor.
Hey, SARE Ladies listeners, Tony the CPA dude here, also your resident SARE tax bro. And with your lovely host, they came up with some great ideas. So Miss Tiffany and Miss Anita here came up with the tax workout plan. So we're going to help you get cut up on your taxes, also going to help you cut up on your own body. So just like working out, taxes is a monthly thing. You can't ignore it, otherwise you're gonna fall off the cliff. So with the code SARE Ladies, we're gonna give you a nice healthy discount, and we're also gonna give the SARE Ladies a kickback just to help support their podcast. I've had a fun time being on their podcast a couple times this year. They've done great. I really want to see them blow up in 2023. So with your support with this creative tax workout plan and also a workout plan in general, we're going to help you transform your life in 2023. So mention the code SARE Ladies when you talk to me. You can email me at Tony@the CPA Dude, text me at 928 CPA Dude, TikTok's the CPA Dude, website's thecpadude.com. Everything's the CPA Dude. So SARE Ladies is your special code here, and let's make this year great.
Thanks for hanging with the SARE Ladies. Until next time, bye.